Here we go, everybody. We are featuring this big bellwether called AIG, American International Group. Everyone knows about the stock. Everyone knows that it's down right now in after hours. Why is it? Because they missed the earnings and whatnot. And so here we go with the big cap, large cap uh, stock in the financial sector missing the earnings again, by the way. So we will be buying the dips on it. Here's the after hours. It doesn't move a lot, but when trading anywhere from 2,000 to 5,000 shares of the name, you can make money on it if you know how to scale in toward the bottom of the lows and then trade it up from there. So AIG has missed its earnings. One of the things that we would say that you would have a little bit of stabilization right at about $49 a share. That's roughly close to the 50 with the 50-day EMA is at around 50, but the simple moving average would stabilize a dollar below that at $49 is where we would look at the first level of support in after hours trading, which is quite different. Okay, so one of the things that we would like to say about AIG is the following. It's very important that the new MMTs understand it, that the revenues came in, the preliminary number is 96 pennies versus 96. So it's an inline number on the preliminary release. And an inline number does not cut it. So the EPS is in line, but with an inline number and a miss on the EPS, meaning that as far as I'm concerned, it's an EPS in line, but they miss on the revs, the revenues. That's a problem. Okay, and revenues fell 3.7% year over year to 8.43 billion versus 8.64 billion. So one of the things that we're looking at is the growth in insurance operating income of 38% to 2.2 billion from the prior year, which would have been the third quarter, of course, MMTs. And we'll get ahead of ourselves on this one, and we'll break down the earnings component as to where AIG would have a better value entry. And so once again, it's the training on the earnings are more complex in here. One of the things that we'll talk about is what they did in the mortgages and the insurance business, and we'll break down all of the components. Uh, the retirement benefited from the strong sales and overall positive net flows. So one thing about this company, it was a doom and gloom story back in 2008, as we all remember AIG and the taxpayers doing what? Don't tell me it was a bailout back in those days with the TARP, right? So, listen, AIG is much better capitalized today based on risk than they've ever been before. So, MMTs, we will continue with this AIG trade over the next year in calendar 2014 and what the forward-looking earnings would look like from this particular miss in this quarter that we see now.